Obviously, anytime you're dealing with the financial markets, it's always going to be a hit or miss affair. And I think that Chipotle stock, ticker symbol CMG, is a bad miss. I miss personally because I felt that this stock was potentially a long-term opportunity, but I was wrong in my assessment. I'll admit that straight out. I felt that it was a good long-term opportunity simply because there's precedent for fast food companies to recover from health scare. You'll recall in the 1990s that Jack in the Box had a similar E. coli scare, and in response to that controversy, they were able to repackage themselves, rebrand themselves, and now historically over the long term, Jack in the Box stock has done very, very well. So I felt that a similar circumstance was in play for Chipotle. I underestimated just how bad things really are at the company. They're forecasted to have dismal sales results when they release their earnings in a couple of weeks. And you look at the sentiment overall, very bearish. The short interest on CMG stock is very elevated. Now, that could mean that in the short term, some of the weaker hands in the short positions may panic out of their positions. That could lift up the share price. But overall, you're not seeing the kind of positive fundamentals that would make you believe that a move up is nothing more than some weird technical dynamics. Because again, fundamentally, you're seeing loyal customers, which make up a core of Chipotle's business, moving to other competitors like McDonald's and Starbucks that are not necessarily direct competition for Chipotle. Nevertheless, they are so freaked out about the health scare and other controversy surrounding Chipotle that they are more than willing, and they have, to move to less desirable outlets. That's a major problem. And you're going to see that revenue is probably going to decline even worse than the forecasted losses. It's just starting to be a very ugly situation. And even technically, there has been some momentum, some positive developments in CMG stock. But as in this current consolidation phase where we're starting to see a little bit of a rest from the horrific decline in the markets, in this consolidation phase, you're not seeing the volume. You're not seeing the commitment of volume, meaning that, yes, there are buyers. Some people are buying at these discounted rates. However, they're not buying in the volume that would indicate that this is a trend. And unfortunately, it seems as if when you look at the volume, it seems as if this is just a short-term day trading. This is not something that Wall Street believes in fundamentally. This is not a company that Wall Street thinks will do well moving forward in the near future. So given that, I think there's more pain. Maybe it still could be a long-term investment, but I think over the course of the rest of this year, I think there's still going to be more volatility. So if there are people who want to place a contrarian trade on CMG, I would probably say, hold off. Let's wait to see what those sales results are. Let's wait to see what those earnings results are. Let's get a better gauge of how Chipotle has responded this year in terms of all the health scares and the controversies. Once we get a better idea, then we can come back, reassess the situation. Right now, I feel that the stock is just too choppy. There's too many questions. There's too many variables surrounding this company. I am going to stay on the sidelines.